Hello and welcome to another video of GJ Management Consultants. So yesterday we covered the order to cash life cycle, and today we are going to cover a procure to pay life cycle. So it is our continuous endeavor that we should enrich our viewers and subscriber with the knowledge of the processes. And our attempt is that we are going to cover the finance processes first, followed by the HRMS, which is like human resource, and the supply chain processes. So our second topic, which is in the continuation to the finance processes, is procure to pay. We are going to cover record to report and financial planning and analysis as well. So let's just move to the first slide of today's presentation. Okay, so procure to pay life cycle. So let's just try to see what is it that we're going to cover today. Five zones, okay, key KPI and CFO dashboard. So what we have done, we have created the presentation deck in the same fashion the way we did for the order to cash, so that we should have a symmetry. And we are going to cover the five zones of procure to pay here. What are the key KPIs that are required to ensure that whether our process and sub processes below them is working fine, and we do not have any challenges in managing those processes. And likewise, our attempt is that how we could able to showcase the CFO dashboard, so that what all things that CFO needs to make sure that before he can ensure that the processes of P2P is working fine, and it is working as per the organization goal. Okay, with that, we'll just move to the first zone, which is the transactional zone. Okay, so as we mentioned yesterday, transactional zone is largely to do with the data, which is that we have some information and we are consuming that information to punch that information, and then we will use that information to either create the purchase order or to create relevant records that are required and needs to be stored in our database. So what exactly we are going to cover, which sub processes which are going to get covered under this is, okay, first is vendor data, master data. So which means that our entire vendor master data, which we have to maintain, is part of this process, which includes that we need to create the supplier and the entire supplier onboarding process, starting from creation of the supplier, his address, and then ensuring that all the documents related to the income tax authorities or the GST authorities are available in context to the Indian scenario. And that definitely, if it is a foreign vendor, that what all information we require as per the statutory laws of that particular country. So in and all, it is a step wherein we record all the master information of the supplier, so that same can be used to create the purchase requisition and then purchase order. So this is purely the information based zone wherein we receive the information and we consume that information to create the data in our system. Next is catalog, PR, and PO. So these are like we have combined all three together because largely it deals with the largely on the inventory side of it, wherein we need to understand what all material we are going to order. We have to raise up a PR basis the catalog that is available, and then that PR needs to convert into the PO. So it has to have its approval mechanism, whereby a proper purchase requisition is converted into purchase order, which is then finally released to the supplier so that he can provide the goods as per the terms of. So what is it there in the next process? Okay, PO validation and compliance. Okay, once we have created the PO, it needs to be validated to ensure that all the relevant informations are correct and not. It has to be validated against the various tax laws and compliances to ensure that we are not, defying any of the rules or regulation which is required as a compulsory for a particular business. We are ensuring that all the compliances are in place so that once we have a PO, it can be released, and the PO is a kind of a final document which binds the supplier to provide the goods at a particular time. So it is our so we have to make sure that that PO should be having all the relevant information, which includes the information for that particular supplier as well, plus any judicious any regulatory and compliance related information that are required to be printed on a purchase order as per the regulatory authority. and then PO amendment. So all these processes wherein we have, let's say, released the PO, but we find that we need to do some amendments in the PO. It either can be the ship to address, bill to address, some change in the quantity, some changes in the price and terms and condition. All these are largely part of my transactional zone. So why we are saying this is a transactional zone is largely because the information that we are capturing here are purely information that is going to get consumed to create the records in the system, basis which the final value generation will happen. Now, with this, let's just quickly go to the second zone. What the second zone holds for us. Okay, second zone is value enablement zone. Okay, what does this zone means and what does this zone talk about? So we have the value enablement zone. We normally call it the zone 2, wherein we are doing the PO dispatch and delivery scheduling. So PO amendment still we are clear in terms of PO has been created, PO has been amended. If at all it requires some amendment, then finally what we have to do, we have to ensure that PO should be dispatched, and then PO should be being given to this vendor, and then we have to ensure that as per the plan he should have agreed with us the delivery plan and the scheduling plan, so that we are clear at what point in time we are going to receive our inventory. So we need to plan for that. So this is an important action, because at this point in time the actual value enablement zone happens, because when we receive the inventory we are actually incurring some cost to get that inventory into our system. So which means that there's a value which is a cost to the organization who is purchasing the goods from the supplier. Then once we have a PO dispatch and delivery scheduling, then we have a good service and receipt. So basically, once we have agreed the terms and condition of the dispatch and vendor has agreed that he's going to schedule the delivery as per the required timelines, then what we have to do, so he must have received the purchase order from our side, and he is now planning to deliver the goods. So on a scheduled delivery date, and on this on a scheduled service date, because when we are raising the purchase order, it not necessarily involves the movement of the goods. It also involves the movement of the services, or let's say consumption of the services. So we need to make sure that there is a proper record to ensure that we have either received the good, and if let's say it is of service PO, then the person or the department which has raised the purchase order, they have consumed the services. So someone has to stamp that confirmation that either they have received the goods in the store and the warehouse, and we are clear that the purchase order for which we have raised, it has been honored once we have received the goods. And in the case of services, the department who has consumed the services, that needs to create an SRN, which is service receipt note, to ensure that they have actually consumed the services, because their stamping is a kind of a proof that as an organization, either we have received the goods and we are liable to pay to that particular vendor, or we have consumed the services and hence we are liable to pay to that vendor. So this is a very important step, wherein we have to ensure that our goods has been received and we are liable to pay to the vendor. Because sometimes what happened that during the month end wherein we have received the goods, but we have not received the invoice from the vendor. So in that cases we have to create a liability for our GRN, which means that we are liable to pay to the vendor despite the fact that we have not received the invoice. So we have to have create that liability in the books, so that we have a proper accounting being maintained. Next is quality inspection. So once we receive the good, it is the department is the responsibility of our stores department and the quality department to ensure whether the goods which we have received is as per the terms and the conditions, and the quality is as per the agreed terms basis which we have raised the contract, to ensure that there is no return if required, and if at all returns are required, it has to be earmarked, so that instead of like first accepting all the inventory together and then doing some rejection, it is always better that we should do the quality inspection and do the return handling there itself, so that we can intake only the inventory which is appropriate for our consumption. And then exceptions handling. So as I mentioned that returns are the exception handling as well. Apart from that, any documentation error in terms of goods received or any kind of the challan which is missing, which is required for us to ensure that our books of records are proper. So all those exception handling is also part of this zone, so that once all those exceptions are cleared, we have intake our inventory in our warehouse so that we are in a position to consume that inventory for our own supply. So this largely is the value enablement zone because it created a value for the organization in the terms of the goods that we have received, and at the same time it also create the liability for the supplier who has provided us with the goods or the services. So with this, let's just quickly move to the third zone. And what does that third zone has to tell to us? This is the efficiency zone, which means that how efficient are we in terms of managing the invoice or capturing that information in our ERP and the database, and we are good to honor that invoice as per the payment terms or as per the due dates. So these are like four steps here. So supplier invoice received. So once the goods has been dispatched by the supplier and we have honored that acceptance through a proper GRN, obviously in a nowadays scenario, supplier normally share the invoice along with the delivery, and it's a mandatory for under the GST scenario specifically for India, wherein goods are being dispatched along with the invoice. But the moment the invoice received at the store level, it has to come at someone who is actually punching that invoice in the system. So supplier invoice receipt is the important step or the first step in the accounts payable department to confirm that they have received the final invoice, and basis that invoice they are going to create the liability for that particular supplier in the ERP or the accounting system. So supplier invoice receipt is the first step. Once we receive the invoice, basically kind of the infrastructures that we have created, it needs to be scanned. Scanned to ensure that the information which we have received in the form of the scanned copy or in the form of the paper invoice, because I think the way we are operating in nowadays environment, there is a relevance of all that information is being stored in the ERP that are competent enough to manage all the data. And once we receive the invoice, extraction of those information is done through the scanning process, whereby we scan all the information from the invoice so that they can be then used and consumed to ensure that the information that we already have in a form of the PO in our system, that is matching or not. So which means that we have invoice being received wherein we have the supplier number. He's also having the PO number and then the product code and the other relevant information that are required. So that is being extracted from the invoice, and that information is used to match the information with the PO that is available in our ERP system. So this is the concept of the matching, and it depends upon the kind of the matching that is being enabled by the organization. So in a typical scenario, all the goods invoices goes to the three-way match, wherein we receive the goods, we confirm that the goods received is matching with the PO, and then once we also confirm that that receipt is also matching with the invoice. So three-way matching means that ensuring that GRN is matching with the PO, and then ensuring that PO is matching with the invoice. Matching of a PO with the GRN with the invoice is the concept of the three-way match. And likewise, we also have a two-way match, wherein in a typical scenario, in many industries and many organizations, they are not having a three-way match for the service PO, wherein they assume that there is no required for a SRN. But as a part of the best practices, we always enforce that SRN is also an equally important document. So as to ensure that person who has consumed the services, he's stamping that he has consumed, and hence he is acknowledging the fact that this vendor needs to be paid. So SRN and CRN, SRN and GRN is a document that are required to ensure that matching is done appropriately. But in the invoice matching stage, we match the invoice with the GRN as well as the PO to make sure that the information that is available in the invoice is matching with the information that is stored in our ERP system. So once that is done, the invoice is getting validated. So there's a process in the ERP to ensure that the quantity that we have raised in the PO, is it the same quantity that we have received? The price at which we have raised the PO, is it the same price at which we have received? And there is no variation. So apart from them, other parameters in terms of whether my ship to location, bill to location, the rate, the taxes, all that information is valid or not, that needs to be confirmed in this invoice validation stage. Once matching is done, then this validation process starts, and then for a non-PO cases, sometime someone has to confirm that they have actually raised a kind of a small document which is not a PO itself, but that document is a kind of an obligation to the supplier to provide that services. So all those validation needs to be done in this step. And then obviously at this stage in point, there are some discrepancies which are available in the invoice, which needs to be clarified with the supplier before we proceed to book those invoices in the system. So all those exception management needs to be cleared in this zone, so that once we have entered the invoice, we are actually sure that this invoice is an invoice which is ready for the payment. So this is the third zone, which is the most critical zone, that because this is this zone only, the supplier is going to get his payment being done. Because if there's a challenges in managing the information in the invoice, then definitely it is not going to get paid. And if that is the scenario, obviously supplier would be in a tough position, because he has provided his inventory, he has provided supplies, but he is struggling to get the payment. And this is the main reason, because the invoice matching is getting delayed, invoices received delayed, or there are some exceptions that needs to be resolved. So moving to the strategic zone, which is my fourth zone, which normally talk about payment run, payment approval, payment execution, vendor statement, and finally the reconciliations. So payment run and the approval is a process whereby organizations run the payment run process basis the due date of the invoice. So due date is calculated, basis the payment term which has been agreed with the supplier. So we have an invoice date, and then basis that date. So sometimes what organization does, so instead of invoice date, they also normally take at invoice receipt date, because sometimes there's always a lag between the date at which vendor sends the invoices versus the date at which we receive the invoices. So typically what happened that the payment due date is calculated basis the invoice receipt date, because we are obligated to pay to the vendor within a time period on which we have received the invoice, rather than the date on which he has issued the invoice. So a payment run and approval is a process that normally happens. This is the due date, and sometimes it is being done manually if systems are not upgraded to that extent. But largely with all the new ERPs, all these payment run and approval process is happened to the system-based triggers. Then payment execution it's a process wherein we actually execute the payment. So payment run has been done, and in a typical ERP scenario and with the large corporates, so once payment run is done, it is automatically getting paid to the supplier through the bank interface, and there is no human touch required. But in some organization where this end-to-end payment process is not being managed through system, there are always some manual touch that are required. So which means that once payment run and approvals are done, it needs to be manually uploaded into the bank side so that the payment run can happen. So the process whereby we upload that information in the bank side or actually do the manual payment, that is called the payment execution. So once we do that the payment execution, the next step is the vendor statement reconciliation. So where we ensure that whatever information we have received from the vendor and what all the payment we have made to the vendor, that is actually reconciled and our books are reconciled. And it sometimes also happen that we normally do this reconciliation as a periodic interval or at a designated frequency as agreed with the supplier. So supplier send his statement to us, and then we consume that statement to the necessary reconciliation and then confirm whether there is any discrepancy or not. Again, in large organization, all this process is being automated with the help of the artificial intelligence, and if not artificial intelligence, through the RPA. So all these processes are automated, but in these small enterprises, this is still a manual process. But it is a very important step in the entire value chain. And the last step is the vendor query management, wherein we handle the queries coming from the vendors. We handle some kind of their challenges in the terms of the payment or in the terms of the invoices or any other query that they have, and we try to resolve those queries. In fact, it is an interface between the supplier and the organization through which they can resolve their queries and ensure that all the information that they require is available. So with this, we have largely covered the four zone, which is my transactional zone, value enablement zone, efficiency zone, and strategic zone. So fifth zone, which is a zone which we are going to showcase in the next slide, largely speak about a zone that sits at the tip of the P2P cycle. So we'll quickly go to the next slide and see what is there for us then. Okay, so strategic value creation zone. tip of Z curve, which is like insights, intelligence, analytics, and governance. So let's just quickly have a look at this top zone. Okay, so at the end of the day, we are ensuring that our process is running smooth. How we will ensure that it's being actually delivering the value which is required to be delivered by the process. So we need to ensure that we have some analytics being made available to the organization, basis which they can confirm the efficacy and the efficiency of the process. So apart from the various KPIs that are associated to confirm whether the process or sub process is running fine or not, these analytics add a kind of a more insights into it, and help the organized to diagnose any kind of concerns if they are having. So first one that normally organization look at is spend analytics, cost optimization, to ensure that the area in which their money is being spent and what can be optimized, how it can be controlled. If at all we are expending money on some items which are not necessary, how that can be controlled, and if we are spending less money on much needed items that we need to procure at a fast pace, we need to also have that diagnostics being made available to us. Supplier performance management, so how suppliers are performing, whether my classification of the categorization of suppliers is appropriate or not, whether all my suppliers are agreeing to the contractual terms or not, and if at all some course correction needs to be done, whether we are receiving all the information from supplier on time. So all these analysis is done to this insight. Contract compliance analytics. So this is largely to ensure that the terms and the condition with which we have entered into contract with our vendor, whether they are doing compliant to it or not, whether any kind of discrepancies which has been observed, and how those can be looked into. So these analytics helps us to understand the way the performance is being happening, and to ensure that it should be managed in a subtle and the coherent manner. These needs to be looked into at every stage to ensure that we are compliant. Working capital improvement. So what can be done to improve the working capital, when how best we can negotiate the payment term with the supplier? Can we do some sort of renegotiation too, so that we can have best payment terms, so that we can then optimize our working capital to also ensure that our DSO should be earlier than our DPO, so that we have adequate working capital to finance our day-to-day operations. Risk scoring of the supplier, to ensure that whether suppliers with which whom we are dealing, they are having the same class, or their their performance has not been deteriorated in the due course of 6 to 10 12 months, and just to make sure that when we are dealing with the supplier, so they are good enough in managing any kind of the escalations that we have. So all those kind of scoring happens, that will help the organization to re-evaluate the rating that they have early given to their supplier. And then final one is to sustainability compliance analytics, just to make sure that all our suppliers and vendors are sustainable, and they are having the good financial, because at the end of the day, if our operations are dependent on their supplier, we need to make sure that they are having the healthy financial, so that we could able to ensure that our delivery, which is dependent upon their supply, can be managed appropriately. So these are largely the six top insights that needs to be available to organization, to ensure that they have enough information, and basis which they can take their decision, and take the decision to do necessary course correction. So having then discussed upon this, let's just quickly look at all the KPIs that are required to ensure that the sub processes within each of the various heads, they are working fine, and to ensure that they are not having any deviation to the agreed process guidelines that has been framed for the organization. Okay, so let's just quickly have a look at the key sub processes KPI. Okay. So on the supplier and master data management, what is the accuracy at which we are capturing the master data, our supplier onboarding time cycle, percentage of duplicate vendor created, vendor data compliance score, catalog accuracy, and the activation. So all these six parameters or the KPI help us to diagnose whether our onboarding process or the supplier master creation process is running effectively or not. If at all there are some deviation, that can be diagnosed if we have an outcome or the reporting for these KPIs, and we can do the course correction accordingly. Purchase acquisition and PO creation, our PR to PO cycle time, percentage of touchless PO creation, PO accuracy, PO compliance rate, percentage of PO rework upon amendment. So all these are again, see, ultimately objective of KPI is, so largely there are two objectives for a KPI: to ensure that efficiency is maintained and to ensure that accuracy is maintained. So efficiency, accuracy, and largely three rather: efficiency, accuracy, and the timeliness. So these are the three outcomes that are being expected from a KPI. And when we measure all these three KPI, three parameters of a KPI, we ensure that the timelines has been agreed, which has been agreed with the supplier and or within the internal department, that is getting adhered. Efficiency is maintained, and the outcome that has been desired to be achieved by managing this process, that is at par with the contractual terms and conditions. So fulfillment in GRN summary: on time delivery, on time in full delivery. So there's a difference basically, because on time delivery is largely for a stage delivery, wherein let's say we have order but we ask for delivery in the five tranches. So this will first will record the delivery of each tranche, and then finally will record the delivery of the final delivery when we receive the total order in for that particular purchase order. So GRN accuracy, GRN pending aging, open GR and IR, quality rejection rate, average good receipt. So all these are parameters which are there, should help us to evaluate the health of the GRN process, and to make sure that we are competent and managing the guidelines which has been aligned. These accuracy and these parameters will help us to evaluate whether we are maintaining that or we are deviating from it. Likewise, invoice processing. My invoice processing cycle time is start from the receipt of the invoice till the final invoice is getting processed and invoice is ready for the payment. First pass match rate, touchless invoice, two-way, three-way match rate, invoice accuracy, invoice exception rate, percentage of duplicate invoices, and non-PO invoice ratio. So all these parameters for invoice processing is again helping us to diagnose the health of the invoice processing process, and whether the accuracy and the guidelines basis which we have agreed with the client, it is being maintained or not. Then if we look at the next one, accounts payable and the payments, DPO, days payable outstanding, percentage of invoices paid on time, early payment, late payment, AP cost per invoice. So again, excuse me. So these account payable and payments, KPIs help us to again, look at the health of the process and such. So if late payment is there, why it is so? Because late payment means that we are paying the penalty. If at all we have not negotiated the vendor and we have not availed the early payment discount, so this is a loss to the organization. So my entire working capital needs is dependent upon this process, because if we have not adhered to the automated payment, then definitely it may so happen that we may miss on some of the discounts being getting availed, and if we are not done that, then that definitely we are losing the funds which otherwise can be utilized in a more optimal manner. Then supplier performance score, contract compliances, spend under management, cost savings, supplier rating, and the critical supplier monitor, percentage of critical supplier monitor. Because typically when we are dealing with suppliers, we have categorized all the suppliers into the ABC category. Our A category supplier are our strategic supplier, who are providing us the goods that are very critical to ensure that we can manage our own output, and we have to make sure that it has to be managed at very closely and frequent interval, and we should have at least ensure that 100% of those should be managed in a span of 6 to 12 months. So this is how we normally evaluate the performance of each of the sub processes. Now just quickly have a look at how at overall level, what are some things that we need to look at it to ensure the health of the process as a whole, and as a CFO, what all he wants to look into to ensure that process of which is P2P process is running effectively. Let's move to the next slide then. Okay, so let's just quickly have a look at the overall KPIs. So these are like, so out of those the KPIs that we have showcased in the last slide, which is close to I think 25 to 30 KPIs. These are like some handpicked KPIs that are required to ensure that our overall KPIs for the P2P is running fine. P2P as a process is running fine. So P2P cycle time starting from requisition to payment. What is that? Touchless rate for both PO plus invoice plus payment at each of these level. What is the percentage of automation? days payable outstanding, invoice exception rate means like total exceptions to the total processed invoices that we have. Maverick spend. So maverick spend is largely those kind of spends which are non-budgeted or non kind of planned for. So what is the percentage of that in our total spending? This is going to give us a huge idea that what is it that is not something which has planned is getting expended for, and what is it that we have done these expenses for. So working capital impact, our cash position, GRIR aging, AP cost per invoice, supplier on time delivery, supplier defect rejection rate. Again, this is a critical one to ensure that whether that supplier with so much rejections are there, whether we should continue with that supplier or not. And then vendor satisfaction score. This is also critical to ensure that how our vendors are experiencing our services, whether they are feeling satisfied with us or not. So this will help us to, this is a kind of the CSAT score or the NPS score for the vendor side. So all these KPIs help us to determine the health of the process. But again, as a CFO level, does he require all that information? May be or may not be. But at the end of the day, what he then required to ensure that his his uh, his uh, his viewpoint in terms of ensuring that everything is working fine. Just let's just quickly have a look at that. So definitely he has bucketed his requirement under four head: working capital, compliance and control, automation and efficiency, and supplier performance. And what he as a CFO wants to look at it, working capital, if he wants to evaluate the working capital and the cost of the capital, he's going to have a look at the DPO, cash conversion cycle, AP cost per invoice, spend under management, and then realize cost saving. And then for compliances, he needs to ensure that Maverick spend. This is again the same thing that we just discussed, to ensure that our non-budgeted expenses should be happen in the controlled manner. Contract compliances, GRAI rating, invoice exception rates, and then in automation and efficiency side, touchless invoice processing rate, straight pass-through rate, and then supplier performance, OTIF on the time in full, early payment discount, and supplier risk rating. So in all, if all these parameters can be made available to CFO, and he has a comparable information for last couple of quarters, then he can evaluate that whether they are trending into right direction or wrong direction. And then definitely, if at all there's some deviation, necessary course correction needs to be done at that to ensure that we are meeting and adhere to the agreed timeline. So with this, we are come to the end of this session. Let's just quickly move to the final slide and see what are the closing comments we have. Okay, so this is the thank you slide. Uh, Thanks for watching this video till end. My sincere request to all the viewers and subscribers, please watch this video to end, and please cascade it, share it, because this video is definitely needs to be looked into by those who are actually entering into the process industry, who have just finished their graduation and then looking for an opportunity. This will add an added advantage to them, because they would then come to understand what is it that this each process is all about. And it's our continuous endeavor. We are open for any feedback and suggestion. So please share your feedback, your suggestion, and we will definitely try to improve upon those. And we request to please subscribe our channel for having a more such informative video we are going to come up with in the future days. So thank you then, and see you till we meet for the next video. Goodbye.